Hello, this is Tom Cloud with my bi-weekly precious metals market update. Man, oh man, if the questions been flying in. And one good thing about gaining wisdom and experience from doing something 44 years, there's not much I haven't seen, and especially dealing with a lot of financial advisors and what they think. And let's jump right into the questions. And I want to first talk about the recession, GDP. Yesterday, there's a revision for the gross domestic product to be negative 5.9% by the end of the year. Now, by definition, a recession, you can have 1 quarter of economic contraction, and when you have the second quarter, you're then in a recession. And if it goes on for another quarter, it turns into a depression by all legal terms. But what they're saying now is that the GDP is going to go down 5.9% for the year, which would be the biggest drop since going back to Great Depression years. And that is a conservative thing. So if the gross domestic product goes down and then you keep seeing it go up, the debt, 58% of the GDP, the debt was 58% of GDP in 2000. 2020, it's now 112%. The debt has now exceeded the gross domestic product of this country. Now, if you're out there thinking that when you see yesterday that airlines have lost $351 billion in 2 months, the government's never supposed to bail out anybody again after we bailed out banks and car companies and all that during the financial crisis of 2008. But no, if you don't think the government's going to bail out airlines, I think you're mistaken. That's going to print more money, more money. The most alarming figure that's come in is the debt has gone over 24 trillion and expanding as quick as it can. We're already at 24 trillion, $250 billion debt, and it's going up. It has hit $2 trillion debt already. The largest debt this country's ever had in deficit is 1.7 trillion one time. We have a $2 trillion debt already with 6 months to go in the fiscal year that ends September 30th. Can you imagine the amount of money that's going to be printed? The US dollar has gone from 123 on the world index, which is against a basket of other currencies, down to 99.8. That's the reason gold's up 13.5%. The paper money is falling like crazy. The US is 1/4 the size of China, and we've done 4 times the stimulation with money that China's done. But in China, like I said, is 4 times. They have 1.4 billion people. We have 330 million people. Another thing that came out yesterday, we're getting ready to hit $200,000 debt per taxpayer, or $75,000 per debt by each individual for older people and babies and everybody. Each person of the 330 million is $75,000 in debt. And if you're a taxpayer, you're $195,000 in debt. These figures are growing astronomically. And you sit there and watch the size of government. Back when Jimmy Carter lost in 1980, because he was managing money bad, interest rates were high, he had a $500 billion budget, and we went nuts. We kicked him out of there and put Reagan in. Now we're at $4.5 trillion budget. The size of government's gone up 9 times. Is there anybody listening to this that doesn't think that that's going to continue? That it's going to get worse. At only an average of 2% on the debt, at $25 trillion, that's $500 billion a year. Per year, $500 billion per year just on the interest. And remember, just 40 years ago, it was $50 billion $500 billion just to run the whole government. We're out of control. It's getting worse. The U.S. dollar is sliding to extinction. If there's anybody listening to this that thinks the dollar is going to make it as a currency, I think you're badly mistaken. Why do you think central banks are buying gold at the rate they're buying it? I think I've touched on the recession, the GDP. Now, the next question up is one you've got to answer yourself. And that is, you move out of stocks, you move out of bonds, you buy some gold, you buy some silver, but you still have a lot of money you want to save to go back in the stock market later. You may want to save it for a house. Where do you put it? Where do you put it? I had a guy put over $2 million into gold. He said, I don't care if I lose 2 or 3%. I know where the gold is, and I know when I need it, it's going to be there. He said, it may be up 40%, it may be down 3%, I don't care. He said, I don't want to leave it in commercial paper money markets. Now think about it. You look at these trillions of dollars sitting in money markets where people have gone to the sidelines, and they can buy a treasury money market, which I would suggest, even though the U.S. government's going to hell in a handbasket financially, they still is the safest right this minute to put it. If you put it into commercial paper, go look at, there's no collateral. Commercial paper goes to creditors like Delta Airlines and great companies like that need to borrow money. So they borrow it at a low rate. The brokerage company makes a little bit, and you have money there. But you have no guarantee from the government. It's commercial paper. And you need to read the definition of commercial paper and get familiar. I'm not saying it's going to go away. It might not. But why take the risk when you can move to a treasury bill money market while you're waiting on all this coronavirus to unfold and see how bad it gets? Will it come around again? Will the stock market go down another 20 or 30%? Will the bond market start going up with interest rates up, which means the bond market down, which has been our safety net for the last decade, has been the bond market. Hadn't been real exciting, but it's been like clockwork going over, but now it's reached a point. So I've touched now on the GDP, the recession that I think will start officially October 1st when the fiscal year ends. We'll be in a recession. And if we're not in a recession, the depression, I mean, we're going to have such high interest rates rising, money being printed, inflation starting to get in the cooker, and we will see inflation if we print enough money to stay out. I talked to an investor this morning that got a $55,000 loan from the small business in this new thing the government has out. And I'm not going to say what he said because God bless him, he needed the money to carry on. But he says, how is it possible to do this, put out there, and then on top of that, give $1,200? Yeah, it's a nice thing to do. Don't get me wrong. I'm not saying, but who's going to pay for it? You're going to pay for it. You're going to pay for it through a decrease in the value of your dollar in the worldwide market. That's what's going to happen. Now, I want to get to the thing, the next most questions that I have that are pouring in is about the premiums. People, we have hit the real gold and silver market. You're used to the paper market driving it, where these companies go in and put up 1,000 ounces and control 8,000 ounces of silver, and they really just own paper. That's all they own. And let me go back one other thing before I go into that. There is a lot of people out there worried about this commercial paper thing that I was talking about. And I think you need to look at the recourse, if I didn't say that earlier, but I want to go back and make sure you look at that it's not available, and in the banks is where I was going to finish. The banks, remember, under G7, every penny you have in the bank does not belong to you. And you say, Tom, you're crazy. No, I'm not crazy. You look at it, you're a preferred lender to the bank, but the government said they'll never bail a bank out again. So you got to remember, every penny you have in the bank, I'm not talking about money markets, but I'm talking about in the bank, It's not your money. Legally, it is not your money. If you don't believe me, ask your banker or read about it. You can put it on Google and read about it all day about being a preferred lender and your money not being your money. So I got that. So I want to go right back to the premiums. So anyway, right now, we were selling silver rounds 2 months ago at $1.25 over spot. Today we're selling at $3.50 over spot. In reality, that's cheaper because you cannot buy physical silver for below $18, even though it's only $15.50 if you're looking at it. There's not a wholesaler in the world that'll sell to me. I mean, we're only marking our silver up 2.5%. That's it. And it's still $3.50 premium over spot for silver rounds and $6.75 for silver eagles. I get calls saying, you're kidding me. And then they call back 2 hours later. We looked on the internet this morning. There's internet companies selling 1 ounce silver eagles for $8, is the last one we saw, to $20 over spot. We're selling for $6.75 and we get 2.5% of that. Rest of it goes to the producer. So you've got to look at this and realize silver's not at $15.50. It's at $18. And if you wait to buy it, it's only going to cost you more because the premium is going to stay there for a while and the price is going to come up. Now, to follow up on the main question is, why is gold up 13.5% through right this minute for this year? Stock market is, the Dow is down 8% right through this minute. It was down over 20%. It's made a rally. But silver is down 14% this year, while gold is up. Like I said, it's up 13, I say 14, just to round it off. Gold's up 14%, silver's down 14%. The gold-silver ratio is 111. Everybody says it's going back to 50. I think they're right. I think when gold gets to 2,000, you could have silver at $40 an ounce. But the reason I want you to understand it is silver is an industrial metal first. Central banks cannot buy silver and use it on their balance sheets. They can only buy gold. That's the reason gold is doing 2% a month for over 2 years. It just keeps on keeping on. And it is going to keep on keeping on, much higher than it is now. But I'm not talking about gold today. I'm talking about silver. So here's where you are. You are in a position where you know, like we did in 2008, when silver got down to $9, that it was going to go way back up. We waited through 08. We waited through 09. We waited through 2010. And in 2011, silver zoomed 92% in 1 year. We were coming out of that crisis and that recession. When we came out of that recession with the money printing, gold and silver rocketed. Gold up to over $18.50 and silver up to $46 per ounce. Right now, if you buy it at 18 and it goes to 54, you're going to triple your money in the next few years because they're going to print their way out of that. The problem is right now is we are going to have a recession. So investors say, I'm not willing to go into silver now, I'll wait. I don't think it's going to go down, one big investor told me, but I don't think it's going to go up. So I'm sitting here telling you as a dealer what's important. People, I do this because I love it. I love human beings through our Christian brothers. We're to love our neighbor. I'm not doing this for the money. I'm doing this from the knowledge of a lot of hard knocks over a 44-year business career in this industry. And I'm telling you right now, it's your choice. You buy it now, and it may drag for a few more months. It may drag for a year. But what happens when we come out of a recession and people like Florida Power, that their energy, if you don't live where I do in Southeast Georgia or Florida, you don't see the ads of Florida Power. They're putting all their money into solar panels for their future energy. it's going to drain silver like crazy. And when they come out of the recession, China, they go to electric cars by mandate by 2024. They're going to buy silver like crazy. Tesla's going to buy silver like crazy. They're getting longer driving spans on their Teslas on their cars. They don't have to stop every 100 miles. They can go to 300 miles. So what you're going to see at one time is a fight between investors and industrial users for silver. And it is going to rocket. It's going to rocket. And the ratio between gold and silver, it's not that gold's going to go down, but silver is going to zoom up and get back to that 50-to-1 ratio, in my opinion. So you pick the number. But at $2,000 for gold, divided by 50, that's $40 an ounce for silver. When it's sitting there right now, you can buy it for $18, including the premium. And when you go to sell this in the future, you're going to get premium over spot. I can tell you that. So it's not like you're paying $350, you're never going to see the premium back. If silver goes up to 48, you may have a premium of $3 to sell it. So you may get $51 for it in the wholesale market. So we live in exciting times for sure. So I've told you many times, go to Dethklok.org, usdethklok.org, and keep up with the debt. It's the most important thing you can do. Spend 10 or 15 minutes a week on it and realize what shape we're going in. As I said, the dollar has no way to survive, and in case you don't believe me, not one country in the history of the world has ever survived that went off the gold standard. We've been off the gold standard since 1971. If you want to go look at history on price performance, compare gold to stocks since 1971. I'm not going to tell you, you do your homework if you want to look. Gold should be your bedrock of your investment portfolio. As God told us in Ecclesiastes 11:2, divide your wealth 7 or 8 ways, because no man knows what disaster will come upon the land. So yes, you need different baskets. You need gold, you need silver, you need foreign currency, you need stocks, you need bonds, you need real estate. You need all that, but we're not here to talk about that today, but that's what you've got to look at. So we've talked about the ratio, we've talked about gold and silver, we've talked about the debt going over $2 trillion this year already, and we've talked about the ratio of gold to silver. What I hope I've done today is get you thinking and get you wondering where this thing is going to go. But it's not good. There's not going to be a good ending. And I think it could be more severe. The coronavirus could come back through for another round. We already hear about people selling tickets to events where they're going to be seated up against people. Football games, baseball games, concerts, church. I mean, we're going to see crazy things coming as this plays out over the next few months and maybe years. But what you got to realize is the answer is not printing money. And how do you benefit when the government tries to keep the economy alive? Is you benefit by buying things that go up when the dollar goes down. And gold is the number one thing, and we'll spend more time on gold in 2 weeks. We'd like for you to call us if you have questions and talk to Dan or myself at 800-247-2812. 800-247-2812. The fastest growing part of our business are baby boomers like me that are coming out of 401ks and making into 2 self-directed IRAs, one for their stocks and bonds and one for their self-directed precious metals. We can be your representative, we can be your broker, we cannot be your custodian. So we recommend you give us a call. We'll give you some custodians that you can use. You can pick who you want, that we have relationships with. But I'm going to tell you, if I was coming out right now and put it in there, I would get it done as quick as it can. And you can do that very quickly, but you can roll to a self-directed IRA with precious metals in it, and still have another IRA for your more traditional investments. But I would get on it, give us a call, and we'll get you started on that as soon as possible. And we're going to be looking at large premiums. We're fortunate enough to be one of the few. You can't believe the number of dealers that call me every week saying, please buy for me, I'll pay you 1%. And the answer is no. I'm not going to use my allocations. They're going to be for our clients. So if you need to, we don't have a lot of items, but we do have silver eagles, gold eagles, gold buffaloes, some gold bars of kilo and 10 ounce. But it's tight. We have some silver bars and some silver rounds, which is probably your best play right now. But give us a call to go into detail on all this, and we'll be happy to answer your questions. Because people, we're in this together. And as I say, I'm going to keep praying for you, the investor. I'm going to keep praying for healing of this coronavirus. And I pray that you'll pray for me to give me strength to go through this and to keep espousing some wisdom, hopefully from a lot of experience, and just being in the fray with you and knowing that somebody cares. Because I can tell you, I care about every penny out there that you have to be a steward over. So with this bi-weekly financial and precious metals market update, this is Tom Cloud signing out.